Now it should be on Facebook, LinkedIn, YouTube. This go on SoundCloud if you want to listen to it on podcast. Please like or share if you find the information helpful. Just like the title, the squeeze is on, and we find this seasonally. This is kind of common, but a couple heads up that I want to give you. Now, I'm not going to share my screen on some of this data. I've done it before, so you can check out other videos on what data we're looking at. I'm just going to kind of reference some of this, and I will tell you, typically the a peak in shopper indexes for used cars tend to happen into February, beginning of March. And last year, though, 2021, it was a late March, more of a mid to end of March when it peaked because the IRS in 2021 had a delay in tax returns during the COVID shutdown stuff. But that was 2021. 2022, it peaked. It ended around March 6th, the week of March 6th through the 12th. I'm looking at it now through Google Trends. That would be essentially this or last week. And we did hit a peak February 19th through the 25th of shopper indexes for this year, but it already started to drop down. Now, again, point of reference, out of a scale of 100 on a 5-year period, right now we are at around 61. Okay, March 5th through the 11th. So this should update here soon, see if we've had another spike or not. This time last year, we're at 75. And if you remember, last tax season was lighter than the previous year, and the shopper indexes were down about that 75 last year in this tax peak. Typically is in the 90s, if not 100, over the last 5 years, and even you can go 10 years back. You'll see February, March peaks, and it's hitting 95 to 100 range. But last year was at 75 shopper index. Right now it's at 61, and it seems like we've kind of hit that peak, and the squeeze is on because as dealers, at the beginning of the year, we've seen a spike, and it was weird. End of December, beginning of January, a spike in 2-week sold percentages for our dealers shot up, kind of like that after the 6 months after when COVID opened back up and wholesale everything or retails were blown off the shelf, and we've seen that at the beginning of January, end of December, and then it kind of dropped back down a little bit and it's been stable, but it's still pretty high considerably than last year. But that's the percentage of sold inventory, and dealers are running slimmer now. If they used to have 100 cars last year, they might have 75 now. So back then they might have had 100 selling 75. Now they got 75 selling 75. So the sale rate increased, the 2-week sold percentage. So what I mean by that, if we have 100 in stock, I look at the last 2 weeks of sales. Let's say we sold 50 in the last 2 weeks. That puts us on pace to do 100 in a month, or we're selling 50% of our inventory in a 2-week period. And so that percentage jumped up to like in the 60s and in the December, beginning of January. And I think there was, I just did a university and I was explaining why I think that happened. One, through my Facebook profile, you could go check it out. I know in January and February, I posted screenshots of price drops on inventory from 2021 Honda Pilots to Honda Odysseys to Lincolns to Ford F-150s to Porsche Cayennes to just a hodgepodge of cars that had anywhere from $2,000 to $12,000 discount from like November. Example would be my wife and I, we just bought a used BMW and it had a $9,000 drop in pricing from what they priced it in November and what we just bought it for a couple of weeks ago. So we grabbed it up. Plus, in the fact that interest rates are going up, even though I could probably wait a few months and get it cheaper, if interest rates are going up, it really wasn't going to save me much money. I wasn't writing a check for this vehicle. We're going to have payments on it. So my payment was probably going to be the same, even though I can buy it cheaper because of the higher interest rates. So we went ahead and pulled the trigger. So that happened at the beginning of the year because I think that happened. Second thing I think happened was a lot of people, I think, got required to start coming back to their offices to work. I know a couple of people who, their employer said, hey, January, we want you back for 1 day in the office, February, 2 days. By March, we want you in the office for 3 days a week. And they're kind of was capping it at that. But at the beginning of the year, I think a lot of employers started calling people back to work. And so families probably had to go out and kind of replace that car that they maybe got rid of as they're working from home. And then I think the other thing happened is all this inflation and higher costing and higher interest rates. And I think, the spouse goes back to work, or the kids are starting to, the teenage kids living in the house are starting to work because mom and dad are getting squeezed and they need the kid to help pay for their cell phone bill or something, And so I'm starting to, I think that's why the job market got strong, is that spouse is going back to work. The kids may be going back to work just to help cover this spread. And then with that, they need they need their cars for transportation to do that. I think that kind of passed. I think tax season is kind of drawing to a near. And I say that even though April 15th is the last day, most people who wait to the last minute probably owe money anyways. Anybody who's getting the returns probably filed and starting to get the returns already. And we just typically see it start dropping off mid-March and the beginning of April. Now, it could continue. We'll see over the next 3 weeks, 4 weeks. But the problem is the car you're buying today for high dollars at the auction, that high price, you're going to take a week to get ready. By the time it's ready for sale and you want to demand this higher price, the market's probably just not there to get it. And this market squeeze is going to get tighter and tighter then. And it won't happen. It's not going to go away up until these aged cars go away. And by the time these aged cars start going away, the cars I'm buying now that are high dollar, the market's not there, because typically we see a 20% drop off between that February, March peak in shopper activity to about mid-April. It goes from used to go from 90 to 70 or 70 to 50. And if we're already at 61, where's it going to drop off now? And again, you could say, well, there's 20% less inventory out there. There's a shortage. Okay, well, I'll show you there's 20% less shoppers. So worst case scenario, it's an even playing field. And the reason why it seems like, man, cars are flying off the shelf is because you used to have 150 sell 70. Now you're carrying 70 selling 70. So it seems like things are moving faster. In reality, you're selling the same amount. So again, we're going to have to watch this. Any car you own today, you buy today, is going to be aged in April, May, and that's really where the bottom, May and June. Now think about this: June, July, August tends to be summer sales events, summer sales-a-thons. New cars are starting to stack up. There's double the amount of new car listings now than there were in July. So if anybody has been holding out for a vehicle, they're probably going to transition to that new car. There's rebates and incentives out there right now. I think I just had a Chevy store here at the university said they got 0% for 72 months with some money on it as far as rebates on some vehicles. So, instead of paying 7% on a used car, maybe I can get 2.9 on a new, or 5.9 or 0% on a new, or I'm $5,000 buried and maybe there's some rebate pad to help, or again, margin in a new car that I can wrap this vehicle in and do that instead of buying a used. So by July, August, I think wholesale really starts to drop. And if the buyers, think of all this bank warnings that are going on with the tech banks, red flags of even if those things start cracking and the stock market goes sideways again, it's just going to be a funny next 30 to 90 days. So think about that car again that you're buying today. It's going to be risky to be holding on to that thing. Again, this dealer, one of the dealers at the university, had a lot of age going on. And I told him, use this March and April to really clean this up, and maybe even take an opportunity to wholesale some of these one-off cars. And one-off meaning, probably not going to get a trade in. Somebody's going to travel real far to buy it, so you don't get any F&I. Take those cars, maybe wholesale them if wholesale's still high, and get off of them. But go into May and June really clean, so you could be a buyer. Because again, customers are going to be out there buying cars. You just got to make sure they're buying it from you, and you're not taking a beating to do it. And so if you have an aged car, then you're taking a beating to do it. Versus I can maybe buy that car $1,000 or $2 cheaper in May and June and price it $1,000 or $2 or competitively with you, and I'm making $1,500 or $2,000, and you're losing $3 because you bought it in the prime and sat on it, hoping that you could control the market and force somebody in it. So get that inventory lean and clean, okay, going forward here, and always position yourself to be a buyer in current market conditions. You do not want to be holding what you got come May and June. And so April will be the test. The next 2 weeks, end of this month and the beginning of 2 weeks of April, I think reality is already starting to hit in, but I could be surprised. Like I said, I was surprised in January, December uptick, in December, January, a volume uptick that happened. So that's where people scrambled out and started buying cars to kind of offset and make those cars back up. And it worked, again, over the next 30 days, but it will work the next 30 days when we typically see a drop off. If you want to see any of that information, the trending metrics, I'll be glad to show you. Just go to lotpop.com, sign up for a demo. I'll show you the metric. I won't do a demo if you don't need one. I could just show you kind of all the metrics that we're seeing that would cause this concern. I hope I'm wrong. Again, I want everybody to have a strong and profitable months, but you can only do that if you're staying ahead of the market. Like David Long always said, create your own economy, and you can, but not if you're tied up in a bunch of age stuff. So if they're moving, move them. If you can get more, get more. If you can't, if things are slowing down, then you're going to have to get aggressive, get them moving. So again, lotpop.com. If you want to go to Lotpop University, we do a 1.5-day class where we go through all the metrics that we think you could track and trend. You don't have to be a client. These are metrics you could track yourself if you'd like. Also, Work the Facts, our book. Again, all these metrics that we encourage dealers to be looking at in their inventory. We even have QR codes to go to videos that break down the tips. Hope this tip was helpful. See you next time.